Good morning. Hopefully, you're having a great morning so far. Glad that you're here. We are going to get started with another trading week. It's going to be a fantastic day today with absolutely no news. It's not going to be very animated, is my assumption, and we are at all-time highs, which makes it more difficult. All-time highs are not very fun. I don't know. We just hit 3 minutes ago. Hit all-time highs right there. Bam. And now we are could go down, could go up. We need to see some context. We got about 9 minutes to the open. No news today, so nothing we really need to be concerned about. And yeah. That's what we got going on right now. So we're going to let the formation, we're going to let price formulate. We're going to see if price wants to give us any type of indication where it wants to go. See if we can get a setup. Our goal today, get 10 handles, get out. 10 handles and get out. That is the goal on a no news day. And if no setup presents itself, if it's not clear, we're going to stay out. We're going to sit on our hands. We're going to be patient. We're going to wait. That is the definition of a trader, of a multi-million-dollar day trader. That's what you do, right? If you want to have those multi-millions of dollars and you want to be that type of trader, well, what do you got to do? You got to do the things that those multi-million-dollar traders would do. Do you think that these multi-million-dollar day traders trade in the chop? Do you think they take random setups or they just click the button to see if something's going to happen? No. We're going to act the way we want to be. And I will be and am a multi-million-dollar day trader, and that is how I'm going to trade. And that is how I recommend you trading. And you will see significant improvement in your trading if you treat trading in that way. And that's what we're going to do today. That's the lessons we're going to exercise today as we sit and watch the market this morning. So that's kind of the plan. We'll wait for some more people to get on here. I have some other things I want to discuss about, specifically about Friday. So we're gonna wait till that happens, and we'll get going here. Market opens in about 7 minutes. Let me drop this. Right, there we go. Getting things set up here. Now, this is all-time highs. That was all-time highs, and now we have our new all-time high. More than likely, these will be ran at market open. That's totally a possibility. And if it does, that's okay. We are at, before the market even opens, we are at all-time highs. This makes it very, very difficult, guys. It does not make trading for the faint of heart. It's something that you really have to be patient, because you got to remember, at all-time highs, price is at all-time highs, and it's probably going to go higher. It's going to act as if it's going lower, and then it will run higher, and that's kind of what we're dealing with. When we look at price right here, we really don't have any clear structure. No structure. There's no 5 minute There's a 5 minute right here. But there's, outside of that, we got equal lows here. I like these equal lows. I like those equal lows. Outside of that, there's really no clear draw on liquidity. My initial feeling is whenever you're at all-time highs, first look for it to push higher and then look for some type of retracement to a key level. Right now, this is the only one that looks like a potential key level for me, and I'm less than 75% positive on that. So equal lows are sitting right there. That's on the 5 minute chart right here, as you can see. And then on the 15 minute, we have these levels here. This is probably our most significant fair value gap sitting right here, which you can't see on the screen because it's that far down. It's not the best. I'll show you. Way down there. We're talking, that's about 2,580 and we're sitting at 2,630. So that's not terribly far away. We're talking 50 handles. I've seen 50 handle moves very, very easily. So low volume, low activity, market open in 3 minutes. All right, here's let's see here. So this all-time high. Here's something I'm going to incorporate into some of my language here with you guys. Looking at all of this right here, the order block that stands out to me is the candle that ran into the all-time highs first. Okay, so here's all-time highs. The first candle that did that was this green candle right here. This is the candle we want to see a change in state of delivery down to the downside. So as soon as we have a 5 minute closed candle below that, we technically have an official or bearish order block. And an order block is also a change in state of delivery. All right, so there's our close. What do we do with this? Nothing right now. We do absolutely nothing with it. This is just us reading order flow. There's really nothing. Oh, is that the 1 minute? That's the 1 minute, guys. Oh my gosh, I feel ridiculous here. Okay, so it would be this candle right here. That was embarrassing. Like, that looked too similar. So we got 19 seconds. If we have this close below this here, this will be a change in state of delivery. However, what do we got? We got nothing in here. We got nothing. We have a high. We have nothing in here that we can really look at when we drop down to the lower time frames. So there's the open. We have open right now. Let's see, price probably run these equal lows. There it is. Okay, so no surprise right there. when it comes to this being an order block, a close below it, we hit a key level with all-time highs, and we push lower. So this is an example of what I mean about reading order flow. We don't take a trade off of it, but we're using this to read and become more familiar on how price is going to move. So this candle right here is the first candle on the 5-minute time frame that ran into this high. It ran into the all-time highs. So if we're going to create an order block, this would be the order block. As soon as we close below that, this becomes an order block. Then we drop to a lower time frame and we look to see if there's any potential setup. We don't have any really setup here, so we really couldn't take anything. And then we run these lows. So there was a just good price action reading that we can learn from. Okay. Now with no news today, price could be a little choppy. Or we might not have a clear setup. So here's the 5-minute. This is our clearest fair value gap on the 5-minute. Okay. Actually, let me rephrase that. It's the only one. How are you guys doing this morning? Give me a thumbs up if you're doing good. Give me a thumbs up if you're excited to be back trading. I tell you what, there's nothing like trading when you are looking forward to Mondays. Just like it's crazy. All right, so look at this candle. New all-time highs. Oh my gosh. Morning, Raul. Good morning, my friend. Glad to have you. Now, if you guys, I'm not going to pull it up on the screen, but if you pull up your 1 hour, tell me what you see and what just happened. Tell me what you see on the 1 hour and what just happened. I mean, to me, it's pretty obvious what happened, especially with that big green candle. There's a hint for you. Oh. This is now irrelevant here, guys. That is irrelevant. These equal lows, no surprise. We got a 5-minute down here. What I'm showing here, I'll pull it up on the 1 hour. Here's the 1 hour right here. Nice 1 hour fair value gap. You see price ran into those, ran into the 1 hour, and then it gave it the energy to explode higher. Okay, that's what that is. Price will come into fair value gaps to get energy to then explode the other direction. That's why when we see these fair value gaps fail, there's such a great entry, because it tells us order flow is changing. Take a look at that 1 minute. That's very... Let me just do 1 hour. There's some manipulation happening in these candles. We're gonna let that work out. 5 minutes hit right here. What do we want to see happen? I really don't care. I just want to see, what does price want to do? Good morning, Mags. How you doing, my friend? I'm glad you're here too. Thanks for joining. Hopefully you get some value out of today. And Robert, glad to have you, my friend. A 1 hour fair value gap filled 100%. Now you're probably thinking, for those thinking, well, we just hit these highs, or why is it reversing if it ran into this 1 hour fair value gap? Remember what happened here. It came into here first, and then what did it do? It made brand new highs. At this point in time, it does not have to go higher. It can drop, okay? It runs for liquidity. Morning, Mark. Good morning. All right, so price here is being a little aggressive. I'm liking it. However, it's not giving us the setups. What do we have here? 5 minute ran right here and already grabbed these lows, okay? There's not an option for us to take anything. Okay, you could take this 1 minute, close, but what did it close? It closed below the low. Not any opportunity. So we're seeing volatility without the opportunity to get in or to have a setup play out. They're running before the setup actually happens. You know what? I forgot, Robert, to put midnight open on here. Thank you. The other thing is, if you pull up the regular trading hours, we just with this bearish candle right here at 9:35, we closed this gap. Okay, so we close this gap on the regular trading hours. So any ideas with the regular trading hours is now gone. And let's pull up and let's put the midnight open on here. Where are we? All right, so midnight open. We're sitting all above midnight open. This is a good sign. All right, so with midnight open sitting right here, and Robert, thank you for at least mentioning midnight open. Here's what I like. All right, so we have accumulation, manipulation, and distribution. If we are bearish on the day, if we get a setup up here, it's going to be the best type of setup for a downside move. I'm not saying we're going to get that, but the best shorts are always above midnight open, and the best longs are always below. Okay, so we're just looking for opportunities here to see what we can get. We got a high, low, higher, high. We break lower. Here's a breaker right here. Okay, so this technically is a breaker. I'm not going to take it, but to be honest, I'm just not sure where price wants to go. Price has not been providing any type of setups, and they've just been running liquidity too quickly. So I'm not convinced that we want to go lower here, even though this is a breaker right here. I'm not taking that. I'm going to see what price wants to do here. The only thing that I potentially like right now is this fair value gap here on the 1 minute. Okay. I like that more than anything else, but it's not my favorite. Why? Because we just created these highs. We technically don't need to come back and run these if we want to go lower. Now, if we obviously want to go higher, then yes, this will be ran and this will work out, but it's a lower probability right now. So this is our breaker. We're just gonna, I'm not taking this, like I said, but we're gonna put on here just to see what happens here. Are we gonna hit these lows right here or hit midnight open? That would be a target, so that'd be 20 handles. Why am I not taking it? I just mentioned that before. We haven't seen any. I'm not sure how price action is. Price action is not convincing me one way or the other, and it's 50-50. And if I'm in a 50-50 scenario where it could go higher, it could go lower, even though I see a setup to go lower, I'm going to sit on my hands. We just had a 5-minute fair value gap. Respect this fair value gap. So this 5-minute candle has respected this fair value gap, meaning that price could find support here and run higher. It could wick lower and then eventually move the other way, but I ideally don't want to play that. I would like to be bearish today, but I'm just not sure because we're at all-time highs and price can just run lower and then just run the other way. Okay, so we're sitting here waiting for some clarity. That's really what we're trying to do. Now, what would change my mind on that is if we see some really high aggression right here. If we see some really some great aggression and we close above this, I will take that for a long, hands down. Okay, you got to look at how price moves. How is price moving? Is price just being methodical? Is it being erratic? Or is it being very clear, strong, and intentional? Right? We didn't have a fair value gap anywhere in here, so we couldn't do anything with this. We only had one fair value gap here that closed, and then by the time that closed and opened, it was already running these lows. So, and it was right on open. So you could say that this was a setup, but it was a small fair value gap. Really wasn't a fan of it. We haven't inversed anything else right now. The only thing that's showing up is this breaker, and I'm just not convinced on price on what it wants to do yet because it's just not it's not clear to me. And it's okay if it's not clear to you. When it's not clear, you sit. When it's not clear, you wait. Okay? Fair value gap, ICT trader. Good morning. Can't see your numbers on the price grid, too small. Can you call out your levels or make the font bigger? Can I do that? Can I make these font bigger? I would love to make them bigger. Text. Let me see if this does it. Okay, it makes it bigger there. Yeah, let's see if we can make those bigger. All right, how does that work? Tell me if that ICT trader, tell me if that is better on those levels. Okay. So it's because we have two fair value gaps right here, 1 and 2, I want to go up to the next time frame. So we'll go to 2M, which is the 2 minute. There's nothing there. So let's go back down to the 1 minute. Let's go to the 3 minute, 4 minute. What about 30-second? I'm gonna get this off. Yeah, we were watching to see if this breaker, but I'm gonna remove this. You guys can keep track of this. I'm not a fan of this move lower right now. We just tapped into this fair value gap. That makes it, if we start seeing bearish price action, that's nice because this would be considered a breaker on the 30-second. Still blurry. If it's blurry, that is not my screen. If it's blurry, you need to go down to the bottom right of your screen. You'll hit the settings bar, and then you can increase the, it should say like 480. it'll say like 480 resolution. You can actually increase that to 1080, and because my screen's 1080, so that should help clarify or make your screen clear. It happens all the time. It's like a default setting where YouTube will make your resolution lower so that it sets up faster. So good morning, Deborah. Glad to have you this morning. We did have a great weekend. Unfortunately, my Friday did not end the way I wanted it, guys. And I'm going to share that here in a few minutes. Very disappointed on what happened on Friday. So, but it's going to make a great lesson and that we can work through and talk through. So, let's see here. So if I'm switching back and forth, I'll try to remember to tell you what time frame I'm on. This is the 1 minute. I'm really watching this 1 minute time frame, this 1 minute fair value gap right here. We have low resistance liquidity sitting right here. So we could easily just run this. We could easily just drop from this. I don't think there's really anything. There's not a single fair value gap here that we can really, that's clear for a drop. Okay, so the breaker would be the only thing. ES is about to hit all-time highs. Okay, so there it goes. Hit all-time highs again. That means we could see lower prices. If one indices hitting and the other didn't, it could be an SMT. We just have to wait and see. And you only take entries based on your setup, not because of an SMT. I still want the most obvious entry is this right here. Well, this is the 30 second, so you're seeing the 1 minute overlap with the 30 second right now. Nothing very clear. So as we're sitting here waiting, okay, so what happened on Friday? Friday, after I took that one trade, I closed down my charts. And I closed out of my trade copier. But I did not remove my stop loss on all the trade copiers, on all the charts that are copied. So it actually filled a position for me without me knowing. I really like this. I like these equal lows here. I want to watch this tiny fair value gap sitting right here. I'm just watching it. I want to see order flow. We just grab liquidity, and are we going to change directions? See this tiny fair value gap? I want to see us run this to run these highs to then close above this where we'll take an entry potentially for the highs. Okay. So Friday, I was triggered, my stop loss triggered an entry for me on like 7 accounts. And after the stream, I just went back into my trade copier just to make sure, to see what my numbers were. And I see that I'm down $600 on each account. It was very, very gut-wrenching. Eventually, I closed the trade that just popped, that I did not personally get in. It was a mistake on my end for not removing the stop loss. And on 7 accounts, I was negative $600. I traded them a little bit and I got them down to about $400, and then I called it a day. but really disappointing. All right, so we just closed this. We did not close this 30-second. We're still waiting for the 1 minute. 1 minute hasn't closed either. So the next candle here is probably going to be, yeah, in 18 seconds we're going to get this closed. If we get this closed, this will be our long. Now this is not an A+ setup because ES has already hit the highs. And it hit it without us doing anything. Isn't that convenient? See, this is what I'm talking about. This is the kind of price action we saw right around open. We saw the setups, but it would run them before we had the opportunity. So now people are like, well, it's going to go higher. It's probably not. It's probably not. So you just got to be very, very careful not to get stuck. Okay, so do you guys see what I'm talking about there? Our opportunity basically was stolen from us by the market. If you went down to the 30-second here, if you go down to the 30-second, let's see this. We closed to the tick. So 2,633, and the high, the close of this candle is 633. So we didn't close above it, we closed on it. That's not a decisive close. I wanted to close above. So there was not a single entry opportunity on the 30-second or the 1 minute on this inversion gap to the highs. So not an option for us to really take. So I ended Friday being up $250 per account to then being negative $400 per account because I did not remove the stop losses that I set. Really, really sucky. Now, what you have to do is when stuff like that happens, you have to emotionally and mentally get past them before you start trading again. If you don't, you'll trade emotionally without you knowing. Subconsciously, you will be taking poor setups. You'll be taking bad trades. You gotta tell yourself that it's water under the bridge. It's not going to affect your trading. That it's not a sign of whether you're a good trader or not. It's crap that happened, and you have to work past it. That's really what you got to do. I'm watching this. I'm watching this fair value gap still, because my guess is we're probably going to find support here and run these highs again. But obviously, now that we ran all-time highs and there's no target above it, I'm not going to take that. No. Now, if you're thinking to yourself, what about this one? What about this fair value gap if we close below it? Okay. It's a decent setup. It's just a lot of risk. You got 30 seconds on it. We want to see a close below this, and it might be an opportunity for us to get short. We want to see the momentum continue, though. We have to close below this on the 1 minute if it's going to be an option, and it did not. So no close below. Okay, the 5 minute, if you look at the 5 minute chart, we are respecting this 5 minute fair value gap. Okay, right there, we're respecting that. So right now we're between two 5-minute fair value gaps. These lows and the high fair value gap and the low fair value gap on the 5-minute chart. Okay, so this is where price can get very choppy when you're between two fair value gaps and it starts bouncing back and forth. When you get closes above them and closes below them, but if below the high and then above the low one, it can start getting choppy. So you just got to be careful. Lima, excellent analysis. My daily goal is done. 200 USD going long. Congrats, man. Congrats. I'm glad you're here. Now, we have this 1-minute fair value gap right here that I'm talking about, right? Let's drop down to the 30-second. Let's see if there's a 30-second opportunity here. Well, look at this. The 30-second closed below it. Now, would we want to if we took the 30-second, we would be being manipulated right now. It would be running against us right now. This is why if you have two fair value gaps overlapping each other, or a fair value gap like the 30-second, which is right here, and then you go to a slightly higher time frame and you have that one right here that has a similar close below, you go with the higher time frame one. You go with the higher time frame one because that has precedence over a lower time frame. So if you go to the 2-minute, there's really not a 2-minute fair value gap, so the 1-minute is really the only one that we're looking at. We still have the 5-minute fair value gap that if we close above, we may see higher prices, but we don't know yet. We got 2.5 minutes left on that. Thirty seconds left. Now, I'm not 100% sure if I'm taking this if we close below it now since we found some resistance. I wanted to see it be aggressive. Okay? I want it to be aggressive. Yeah, I really don't like anything here. You got these 15-minute candles that have these really big wicks that just make it very difficult to get a clear read on a higher time frame basis on where price wants to go. So you have to go to a lower time frame, but then the lower time frames aren't as reliable because you're not clear on the higher time frame. This is a decent candle. If the candle has an aggressive like this, and I just don't want it to run without us. We're probably going to close below these levels, and there it is. Okay, so see this aggressive candle and how it ran this low before even a close. So we really can't get anything. You could chase this, but I mean, you're not gonna want to chase it. Yeah, this would be a chase to that low. It's probably going to be hit. There's the hit. It's just not something that you really want to chase with no news market. It's changing directions quite a bit. See how you can look at past price action, but what you're missing when you're not here sitting live on the charts is you don't see this massive drop of a candle. When you see candles like that and then you see it hit the sell side, that starts giving you confidence in future markets to take an opportunity for when it starts dropping before it actually closes. Because this was our target. A close below this means we'll take the short. Well, it was already down here before we could have an opportunity and ran some sell side right here, which means we're not going to take it. Okay, so there wasn't an opportunity for us to take, but you can see this candle and it's very obvious that once you see a large candle like this, you're like, yeah, we're going to probably run this side. We're probably going to run this. Right? And you can make your own model around whatever you want to do. I won't do that, but we just tagged the midnight open. So if you're asking me, well, Tyler, why aren't you trying to go short now? We already grabbed some sell side, and I'm not sure if we're going to go lower. We got some sell side and a 15-minute fair value gap sitting right here. But do I have a clear entry? Where's my clear and obvious entry? I really don't see one. I really don't have one. What firm are you on there, Lima? If it's with Apex, the only thing I can speak with Apex is your first payout typically will take longer because it's your first one. But then afterwards, after that, as long as you're following the rules, you'll tend to get approved more quickly. And they do have some rules that are not the best. I mean, not necessarily the best, but they make sense, and they're great for consistently profitable traders. And that is, you can't take any, if you've had a loss where you got in long and then you averaged down more than once and it ended in a loss, they'll deny your payout because they have a limit on your ability to average down to only once. You can only average down one time. This is not a long that I really like, guys. This is a B setup. B plus. I'm just not as, it's not as enticing to me because we just redeliver from all-time highs, and I would like, and we're really high in premium. I'd rather us see us go lower. I see this mitigation block sitting right here, this high, low, lower high, break below it, come up into this mitigation block sitting right here. If I wanted to see something, I'd like to see this. I like to see something like this. That's what I'd want to see. You got breaker opportunities. You'll have inversion opportunities to go short. That's really what I'd want to see to the downside. I'm not really excited about upside moves because we're so high in premium. Let's see if this plays out. It's not, I mean, it's a B. I'm not really excited about it. So here's your close. You would, let's just do this on here so we can see it. All right, so this would be your target. Your target would be right here. Okay, as soon as you hit that, you move your stop to break even. Okay, so now we should take, you want to take some right there. You would want to take some, I mean, it's only six and a half handles, but your stop would want to be moved to break even because we could reverse right away. Okay, so our next target, if we aren't stopped out, will be to run this. We want to inverse that fair value gap sitting right there. Okay, we want to see that fair value gap run, but we just got stopped out right there. Okay, so there's our stop to break even. So not any clear, obvious move. We have equal highs right here, so we'll probably see prices at least come up into this fair value gap sitting right here before it either drops or breaks to highs. If these are left here, if these are left here and not ran, that's two things. Either bad price action or we're going to come back up here later and it would mess up any short opportunity that I would want to take. So technically, because we have those equal highs, I probably wouldn't have moved my stop to break even because knowing we're probably going to run that equal high. But it would need to, your stop, you would have a larger stop, 18 handles. But if it's not going to run it, I would call it bad price action. And it would mess up any short that I would really want to take because it's leaving it right there. So let's see if it runs it right now. All right, so there's the equal highs broken into this fair value gap. grab some liquidity here. We have this inversion that is sitting right here. We haven't closed below it yet. Not really a fan right now. I think if you just go up to the 5 minute, guys, look at the 5 minute time frame. It's really nasty. We've closed above this 5 minute. We've wicked below. We've hit the equal. We've closed below it. So here we closed above this 5 minute fair value gap right here. At the 9:55, we closed above. Then at the 10 o'clock candle, we closed below. Now it looks like we're going to close above it again. I just don't like it. This isn't very nice. It's not very clear. Not very clear price action at all. Excuse me. I mean, if anything, if you run to the hour, the hourly looks very bullish. And you can't even look at the 4 hour because, I mean, there's 4 hours left on it. So it does look bullish. I would say more bullish than bearish right now. There's really no indications that we want to drop, even though I would like to see us drop. Here's the 15 minute that I'm looking at right here. Look at this candle right here. We came all the way down to the midnight open, wicked right below it, and then we're back up at these highs. Respecting this 1 hour as far as the bodies on the 15 minute. So this makes this somewhat interesting to play for an upside move to the highs if we continue to see this type of setup. That's the only thing that looks relatively clear in my mind. I wouldn't want to take this short. It's right in the middle of all this chop, and we've seen what price is doing right now. So this is the only thing that looks somewhat clear to me that we could, if we inverse this, we may run for these highs. Yeah, I don't. It doesn't surprise me. People are have left the stream because it's a Monday with no news after a holiday weekend, with quite frankly, fantastic price action. So it doesn't surprise me. It's if there's a day that you want to preserve your capital, it would be today. It would be today. You're looking at this candle saying, oh, it looks like a giant red candle, giant black candle. You got to remember there's still 30 seconds left on the clock. 30 seconds left on the candle. Now, if there was 15 seconds left and it was doing all that, that would be more interesting, right? Not saying I would take it, but you just got to look at the candle in relation to how much time is left for that candle to close. And look, we don't even close below the fair value gap. And it closes above it in the premium area of the fair value gap. So you got to be careful not to take something too soon, because if there's 30, 45 seconds left on the candle, it could just wig down and go back up against you. I'm sorry. I am sorry, guys. The yawning. I hate yawning on screen. If I could cover my screen, I'd go like this and yawn. But that seems a little ridiculous. All right, let's see. It's 10:15. we really are outside of the macro time. It could still run. We could still hit some levels, but really my favorite times to trade are between the last 15 minutes of the hour and the first 15 minutes of the hour. Those are my favorite times. You just got a higher probability that price is going to move clearly in that direction. So I'm telling you in advance, this is what I'm watching, because I know there's a lag in this. This is what I'm watching. Close above this, I'd be interested in taking this long to this high. It means you come back for the next session, which would be the PM session, or you just take the day off and you go do something else. You could just, I mean, we're just consolidating right now, and this was all within the macro time. We did run this liquidity right here, but we're really consolidating, and we've just been doing that all this morning. So if you're going to come back for another time, you come back in the PM session to see if price is changing, if price is running, has clearer peaks and valleys. It's respecting PD arrays more. It's not just consolidating in the PM session, or you just wait till Tuesday. And I will not be trading. I will not be live Wednesday, Thursday, and Friday this week. I am going out of town with my family, and so I'll only have my laptop, so I really won't be able to live stream, unfortunately. Do you think you'll get a Discord going soon? Yes, I will. I will be. That is the plan. I have it open. If anything, I'll have it for just for education and community. I'll be putting that together, and I will eventually do live streams on there for anybody that's a part of it. But I need to be, if I'm 100% honest, the amount of work that goes into a Discord, Mark, is quite a bit. The expectations for a Discord are a lot, especially for those that are joining, that are wanting the value. That I unfortunately need a slightly bigger audience. It needs to be worth the time, because everything, I mean, no matter what you're doing work. All right, we just inversed that, and we have some nice momentum. I'm not convinced on anything yet. I'm not convinced yet, because this is the first 15 minutes of this candle. Well, Mark, I appreciate that. I appreciate that you'll be there. I will keep everybody in the loop when that happens. But really, for that to happen, and for the amount of work that it is, I need a bigger audience. So everything right now is on YouTube. Just because it's easier to be right here, I can talk to you right in the moment and be done. So see where this closed. It looked like it was going to go. It still could go, but look where it closed. It closed above these lows. Doesn't mean it can't still go, but that's what I'm talking about. You can't chase these types of candles, because they'll just wick right back up against you, and you're not sure if it's going to go in your favor or not. Okay? So we have a potential direction, at least, right? We have a potential direction on where price is going to go. Let's see here. 15-minute. We got 8 minutes left on that 15-minute candle. It's not really, maybe if it came up against here and it found some resistance and we had an inversion right here, I would take it lower. But there's really nothing clear for me. Masato, How you doing, my friend? Hopefully you had a good weekend. Thanks for the encouragement, Mark. Yeah, it does take time. It's just a matter of time. I do understand that. It takes a little bit of time. And I do just got to do more of those one-off videos like, I see the top 10 ICT tips, stuff like that. I just got to make videos on that to just get more exposure, and then people are like, "Oh, who's this random dude on YouTube? Oh, he has a live stream. Let's check him out." And that's typically how it happens. Or people on my live stream share on X or share in other places. So if you want to share it, I won't say no. So we have this inversion right here. Do you think I like it or don't like it? Do you think I like this or don't like this? Give me a 1 if you think I like it. Give me a 2 if you think I don't like it, and then I'll answer. Do I like this fair value gap? If we close above this, do I like this for going to the highs? Yes or no? Or 1 for yes, 2 for no. So the answer for me is going to be a 2. No. The main reason is we haven't grabbed liquidity. We ran this little bit of liquidity, but we really didn't run any sell side liquidity to make this a legitimate move. Okay? So instead of this being an A+, this is a B+. It could still work out. It could still work out in our favor and go longer. But because we didn't run, if we would have ran down here, this low right here, we did that and then we inversed it, that it turns into an A+. But because we didn't run these lows and we're re-delivering from nothing, to be honest, I don't even think that it would give us this type of move because we haven't ran any liquidity down here. So we don't play inversions. We don't just play inversions. We play inversions based on liquidity. Masato has it right. You have to run from internal liquidity to external liquidity, or you have internal highs and short-term highs. So internal high, I'm talking about external liquidity and internal liquidity. So right now, we have ran internal liquidity here. We never ran external liquidity. We never ran these highs. So we have to run and grab external liquidity, which would be this low from this leg, before we could potentially turn the other direction. So I'm not a fan. I'm not a big fan on playing this to the upside. Hopefully that's clear. Hopefully that gives some clarity on that. The second reason I'll add is look at this tiny fair value gap right here. I did see this before, but it wasn't my primary reason on why I didn't like this. So you would actually have to jump to a higher time frame, and this would be your higher time frame IFVG right here on the 2-minute, but then it's overlapping with a higher 1-minute. So I don't like that as well. So no long and unfortunately no short. Unless we do what I wanted it to do, we run here or here and then we do this. That's the only type of scenario that I would be interested in right now. We have to grab liquidity above these relatively equal highs right here or hit all-time highs again before I'd want to go short. Or we just get a solid, gigantic bearish candle that gives me a clear indication that we're moving lower. And then I would, from that point, look for some type of setup that forms out of that. So let's tape read this. There's still it still could work, but it's not my entry. It doesn't have my rules that I want for me to go long. But we're going to tape read this and see what happens. Okay, are we going to close above this? Let's see. We don't close above it, no close. We have this small fair value gap here as well. Real choppy indeed, Deborah. Real choppy indeed. Okay, so look at this. As price continues to move, we get more data, right? We have this fair value gap, tiny fair value gap sitting right here. We want to see, is it going to respect it? If it respects this, it makes this fair value gap a little more attractive. Not A plus, maybe A, but not as attractive. It would just be more attractive because we're respecting this tiny fair value gap sitting right here. Okay? As more information comes, it changes our analysis. If we inverse this inside of this fair value gap, then there's a good chance we run for this swing low right here, and maybe this low resistance liquidity sitting right here. Fair value gaps, that's what we've been talking about. Inversions and fair value gaps are the same thing. They act in a very similar way. However, you can't just take every single fair value gap. Well, when you look at my trading, Deborah, I only have two strategies. So if you like what you're seeing as far as the strategy that I use, then you can implement that same type of strategy. You're not understanding the concept. And if I remember from Friday, you said you were relatively new at trading. You just have to give it time. You have to give it time. Okay? It took me a year of studying this to get to where I am right now. A year of studying every day. So if you're on the live streams, if you're on the live streams and you ask questions and then you're intentional on reading price action, it will become easier. It will over time. You just got to be patient. ICT says this all the time. You have to submit yourself to the process of time. Allow yourself the time to learn the process. Allow yourself the time. Okay, we're going to close above this. I'm not going to take it. All right, there's the close. Let's see what happens. Okay, there's the close above it. Why didn't like it? Because we're not delivering from anything, and we have another fair value gap right here. Let's see if my rules are going to benefit me or if this runs without me. Okay? Let's just see what happens. It can still run without me and I'll be okay because you have to have a set of rules that you follow when you're trading. All right, so my manual stop, I always will have it around 15 handles. it has to close below this fair value gap sitting right here. We just closed above it. So we should expect it to run higher, right? Assuming we ran these lows and we didn't have this fair value gap, okay? Because of those two things, I'm not in this trade, because I think that it could just be a fake. However, if this fair value gap was not there and we did run these lows, this would be an A plus inversion to the long side. If I have an A plus inversion to the long side, we stay in the trade until a close below this gray box. If we close below it, then we get out. But I also have a hard stop at 15 handles, because what I don't want to have happen is it to run all the way down here within that 1 minute candle, and then now my stop loss is a 30 handle stop loss. That's just insanely large, and I don't have the balls to hold it through that. And if it doesn't retrace back up above this box, well, then I'm closing it down at a 30 handle stop loss. So I have a 15 handle stop loss approximately. We're targeting these highs right here. Okay. And we want to see if price is going to run in our favor, that we inverse this fair value gap, even though we have another fair value gap sitting right here and we did not run these lows. Okay. Over time, you figure out that these rules are going to save you, and you end up following them. Okay. So there it is. We just hit our stop, 15 handle loss if you would have tried to take this inversion to the upside. This is why you can't take every single inversion or inverse fair value gap to the upside. Okay? You just can't take every inversion fair value gap that presents itself. You got to understand order flow and liquidity and know where price is going to run. So it ran against us. It saved us. My rules have now been reinforced even more that I want to follow them. Okay, there's going to be times where it will work out and you're going to miss a trade, but you got to remember your goal is to preserve capital and then find the A plus setups to add to that capital, not take away. I still like this one though. This is the obvious one in my mind. If I'm honest, guys, this is just trash price action. It's really okay. Everybody, take a screenshot of that right there. Take a screenshot of that. Okay. If you see this in your charts, walk away. Don't trade it. Don't try to trade it. Don't think you can, scalp quick trades out of it. You probably could scalp some, but it takes a lot of skill to be able to do stuff like that. Stay out of this, okay? Now, I'm going to do a poll. This is all right, here's a poll. I got 21 of you on here. Nobody will know whether you push yes or no. But I want to know, have you taken a trade today? Have you taken a trade? Have you taken a trade in this price action? I want you to share. Nobody will know if you took it or not. Nobody knows who you are. But this will benefit all of you if you all participate. Here's why. I want you to see how many people have taken trades, what percentage of people have taken trades, and I'm on the stream and I haven't taken a single trade. Okay? I haven't taken a single trade, but let's look at the chat and let's see how many people have taken a trade. Just be honest. If you've taken 1, 2, 3 trades, I don't care. All right, we are seeing some price move now. See how now we're getting out of this price action? If we close out of this, then we might have some opportunities here coming up. But if you've taken a trade in this price action, you got to ask yourself if 73% of 11, so if 8 out of 11 people have taken a trade, 8 of 11 have taken trades out of this. Do you think that's the wisest thing to do in price action like this where it's just choppy? We all know the answer. We all know the answer. But the truth is, it's like we don't care. We just want to see if we can get something. Okay? That is the most important thing you as a trader need to overcome. This need to have to take a trade. The need to take a trade, you have to overcome it. You got to be able to be okay not taking it and letting price play out. Okay, we're still respecting this, and now we have an inversion right here. This is decent, but what is it going back up into? It's going back up into this trash. It's going into this trash price action. So I really don't like this inversion either, because what did we do? We just go, we wick the lows, we grab liquidity, and then we get back into this range. So I'm not a fan. This actually could work, though. I'm not going to take it. This is more of an A-type plus setup, but I haven't seen price be clear. So this is, we got 48 seconds. I want to see where price is when we do that, and I'm going to decide what I'll decide at that moment. So this is one that I haven't decided yet. Am I interested in this? I just need to see where does this candle end up in 30 seconds. We have, it's a relatively small stop. So you have low risk here, okay? So look at the risk. It's 6 handles. Your stop would be right here, 15 handles. So it's relatively low risk that you could take this trade. So this is a lower risk trade that actually could work out. I'll probably try this. Low risk, as in 6 handles stop. Those are okay, so no close above. Still not taking it. Okay, but this is a lower risk type trade. If we are closing below this, it's just 6 handles, and I could easily have my hard stop. Okay. So let's see what price wants to do here. Let's see if it gives us an opportunity. "27 seconds. Really, I want it to stay. Do we have anything clear? 4 minutes left. "11 seconds. All right, I'm going to take this trade.
Order filled.
We'll see what happens here. Entry was right there. I'm watching for a stop right here. I want it to run to this high right here.
Order submitted.
I'm not liking how we're finding resistance right here, okay? I'm still watching it. I put an order in for my target up here. All right. Let's see where we close in 1 minute. What do we got? 30 seconds left. Okay. I'm not liking the way it's moving, and got 20 seconds left. Let's see what happens here. It's looking 10 seconds. It doesn't look like it's going to wick back up into that. Let's see if it does. All right, I'm going to take my loss right there.
Order filled.
So I'm out. So I took a loss on that trade. Followed my rules. Was looking for this to inverse. I told you that I felt like this was a lower probability, but I like to scrap liquidity. It follows my rules. It follows the setups. So I took it live on stream. Even though I said it was lower probability, it followed my rules. We ran liquidity here. We had a singular fair value gap to this high. We closed above it. The risk was relatively low. So we only ended up with a 10 handle stop, and it did not work in our favor. So that does happen from time to time, and it can happen more often on days that are choppy. Okay. So that was my first trade on the day. Looking at this a little bit more, the 3 minute is probably the most obvious. So instead of grabbing this 1 minute, grabbing this 3 minute would have been more clear. So price was being a continuation of what we've seen here before. So lower probabilities, it doesn't look very good. All right, so I missed a couple answers here, so let me go back and answer a couple of these questions. Jonathan, but lost a bit and closed immediately for a small loss. I don't know what we were referring to before, John. I'm not sure what you're referring to. But need a quick scalp to dig myself out of the hole. Got it? Okay, but I do understand. 0. My model would have worked out taking the first 5 minute fair value gap after 10 a.m. Trade played out to the downside, but sat out due to the choppy price action. That's called a win. 0. That's a win. You have to be willing to not take a trade when you see choppy price action, even though a trade may play out. That's okay. So I would call that a win. I've been thinking it's going into the old 15-minute fair value gap at 2,585 or below. Masato, my short entry. Masato, 24 handles. Congrats if you got that short. Congrats. We are now entering the 11 a.m. macro time. So we have an 11 a.m. macro time that we're now watching. Jonathan, impulse trade, totally. Those are hard to stay away from. But when you can master it, that's where you're going to start seeing growth as a trader. We got a lot of short-term highs. All these are short-term highs. This is probably an intermediate high. This could be a long-term high because it's all-time highs right now. Okay. Short-term high here. We ran the short-term high, so this is an intermediate term high. We have another short-term high here. And then we have a sell-off here. The only potential interesting that I haven't done much with is this inversion gap right here. It's on the short term following an intermediate term high. And when you close below that, that's a signal for a short, and it did work out here. It did run those lows. When I say signal, I'm saying that that's what I've heard, and have not back tested it myself. Yeah, I agree with that, Masato. Took the lows. If we can get into this, 15-minute fair value gap, and we run this sell side right here, we could sweep this, and then you could see it turn. That could be an option, but I'm not sure if it's gonna want to do that or not. There's a lot of things that I would want it to do. We got all this chop right here that it's not being very clear to us. This is the trade that we took earlier, that I took for a loss right there. And so this is just what it looks like right now post-trade. Closed above it, we closed below it. Now we're just consolidating right here with no real direction. If we close below this, we should be running, but we didn't, right? So we're either just consolidating, and we're in a consolidation period throughout all this, or we're just in crappy price action. Yes, I only trade NQ. I just once you like learn an asset, once you spend time, you just get comfortable with it. The most losing day that you have is on a Monday. You know what? That's for me. It's either a Monday or Tuesday that I'll have my most consistent losses, for the most part. Or back in the day, it was news days when I would trade FOMC or CPI, and then I didn't follow my rules. But what I was saying, Deborah, is once you get familiar with an asset, you tend to know how price moves. What I mean by that is when I start seeing these candles like this, I know what these candles do on NQ. I don't know what they do on Tesla or Apple or ES nearly as much. On ES, I feel like it's more choppy when I see these big candles. It will run big, but then it will retrace, right? You just get familiar with a specific type of asset, and when you become familiar with it, you can build confidence that you know how to trade it. And really, 10 handles on NQ is $200 with just one mini contract. You can get so much out of the Nasdaq, and it's super liquid. It's super liquid. There's more people trade this asset than just about anything else, it seems. So there's a lot of opportunity on the Nasdaq, and my mentor, ICT, trades it. So that's what I learned off of. And so I like it. Yeah, Masato, you gotta be able to. You can't go into Mondays being scared. If you are, then you shouldn't trade at all, because those feelings that you have dealing with on the inside are going to influence your trades and your trading. You have to convince yourself that you can overcome your Mondays, or you just don't trade them at all. So your confidence level needs to be at, a 10 out of 10 going into your trading, knowing that you can overcome it. You still may take a loss, but it's the mindset that matters. You have to master your mindset. So I came in today thinking, yeah, I'll get a trade. And I took a loss. That's okay. ICT is the one that came up with all these concepts. So he came up with the concepts of fair value gaps that you are referring to, that you want to learn more about. He came up with fair value gaps. He came up with inversion fair value gaps. He came up with order blocks. He put the language on everything that I'm describing. He came up with it. So he has a YouTube channel called ICT, or the Inner Circle Trader. That's what it stands for. And he has hundreds of videos on there. They're very long. They're hours long. He goes on lots of rants, but there's nuggets throughout there. My goal is to take his content and then put it in a form that's very easy for people to understand. That's very direct and to the point, and not very. I don't go on rants or anything like that. I stay focused, because he likes to. He'll just talk for hours. He'll just talk for hours, and it can be a waste of time. But if you can push through it, you can watch all the videos. You'll learn a lot. Yes, you need to do what you're afraid of, but you absolutely, Masato. Let me mention this though. You say here, I need to do what I'm afraid of. Yes, but your mindset, you have to be convinced that you can overcome it. That's when you trade. You have to be convinced on the inside that you can overcome it. If you're not convinced on the inside, stay away, because that fear is going to eat at you, trying to manipulate you and get you to do something that you don't do. These are the principles of the kingdom of heaven. It says in the Bible that without faith, it's impossible to please God. What is faith? Faith is a confidence, knowing that you can overcome, or that you can do something, or that the Lord is going to come in. You have to have an unshakable confidence, an unshakable faith that you can get there. And if you're not there, get your insides, get the confidence that you can do this on the inside first. Then when you show up to actually perform, your mindset is right. You have the confidence to do it, and you will probably see that happen in your trading. Yeah, things happen. You'll take a bad setup here and there, but you got to believe that that's not a reflection on you as a bad trader, but it's a stepping stone to becoming more profitable. There is so many nuggets in the Bible that directly correlate with trading that has helped me tremendously in my journey. The problem with Michael is too much zoom in when he's trading. That's why he's a good teacher, but not as a trader. But in his rants, I find gems. To be honest, ICT gave me hope to stay in the game. Yeah, no, he has gems. He just drops them at random. So he'll talk at random for a bunch of different things, kind of like I am, but I'm just answering your guys' questions. And we're just watching the charts. Then all of a sudden he'll go, oh, right here, if you look at this, this is an order block. If we close above this, we should run for this high right here. Why is this an order block? Because it ran some lows. That's what he does. And it becomes, you'll find gems throughout his rants. I just watch all of his videos on 2.0 speed. It's the best thing ever. If you go down to the right side of your YouTube, you can actually speed up the video, and I watch it on doubled speed. All right, it's 11 a.m. right now, and we're seeing price move. We could see a price run right here. I'm looking for an opportunity for a long. That's what I'm looking for right now. That's a good lesson to learn, Deborah. Absolutely. Just keep your losses small. Don't make them big. Don't oversize.
Order filled.
I'm going to run this for this high right here. Just a small little scalp. Want to see it hit. There it is.
Order filled.
I'm watching this inverse right here. That's what I want to, I want it to run. Let's see if we can get it closed in 30 seconds. Doesn't look like we're going to see this close yet. We have this nice 5-minute low resistance liquidity with these highs. I think we're going to run, guys. I just don't see, let's see, what do we got? 2 minute, 1 minute. I'm not in this long. You'll hear it. I'm waiting. Looking for my opportunity. I'm thinking of a slight retracement here. Maybe into this fair value gap first. That's what I want to see. Really, I want the 3 minute. I'm waiting for the 3 minute. That's really what I want. So a retracement into in this 1 minute right here would be a breaker. This is the clear one in my mind. I did take a quick scalp. I took a scalp on the 1 minute. What does? Hang on. I'll explain that here in a second. We got 14 seconds for this. I'm gonna see if this is gonna go. Okay, no close. So we got it. We have to wait another 3 minutes. I took a quick scalp right here. When we retraced right here, I was expecting price just to hit this high. It was just a four handle run. So I got in long and sold it right here. When I do those quick scalps, I don't hold for these longer moves because it did run. But because I'm taking a position that's not based on an ideal entry spot, because the ideal entry was on the 32nd. We have this small inversion that we closed above. So I saw this close of this 32nd inversion, but we are already right around here. So I took this for a quick short scalp because we are already in discount. So here's here's highs, here's the low. This is discount. We're in discount area right now. So I want to see this 3 minute. We still have a minute and a half left.
Order filled. Order
Moving
submitted.
stop to break even. I want it to run right now. All right, this is my position that I have right now. Really want it to run right here. And if it runs right here, I want it to run this high, but I don't want it to stop me out. I already moved my stop to break even because we ran this high. Okay, not a lot of displacement that I want to see. I want to see this run. I don't want any red candles. And if it stops me out, my stop's at break even. Looks like it's going to stop me out here. I really want this moving. It's not moving. So it's probably going to stop me out, but I have my stop at break even. I want to see this candle close green. If it closes red, we'll be stopped out. All right, so we got green candle here. That's a good sign. Let's see us run for this liquidity sitting right here. This is MNQ, what you're seeing right now. So this trade is on MNQ. Okay. Okay, so there's our high. If you want to take size off, you can take size off right there. I'm going to try to hold for these. If it runs red, I might just close it. All right,
Order
close
filled.
that trade because that's going to be break-even trade right there. So we have equal lows here. I was afraid that we might want to run those. Let's see if price wants to run those. That stinks. It's probably still going to work out, but I have these equal lows here. If we run these equal lows and we have another inversion that's left right here, or we have another fair value gap, an aggressive candle lower here, and then we inverse and we continue higher, I'll play that again, because I think we are going to run. But its price is not very clear right now. Let's see how this closes on the 1 minute. We got 46 seconds. It'll probably run without us, but I'm liking this. If we close above this, that might be another opportunity for an entry, but we just got to wait and see what happens with the 1 minute. These are messing up my thoughts here, guys. These equal lows here. I have a question, Michael. How you doing, man? That trade, at one point it was over 20 ticks up for you. Once it crossed that point, why hold? 20 points on NQ. So it wasn't 20 points. It was almost 10 points for me. And I only had one contract. So I couldn't scale. And I wanted to take personally, I have always closed at 10, and I'm trying to hold a little longer. So this is a personal development thing. This isn't a hey, everybody should do this. Me on an individual basis, I'm trying to hold for some of these bigger moves, and we're right around the 11 o'clock. We made this low, so we are seeing this nice push that I wanted to take a chance to see if we run for a little bit more. And once I saw the candles not running in my direction, I closed it for 20 ticks, which was 5 handles. So hopefully that answers your question. It's a personal preference. If I was trading multiple contracts and I had 2, I would have scaled one there, and then the other would have been for break even, because I would have wanted to try to hold for this up here. But it didn't go in my favor. Michael, does that answer your question? So it wasn't. I mean, it wasn't 40 handles, because I got in right here. And the high right here is 9. Right there, 9.5 handles. So it wasn't 20. 20 would have been way, way, way up there. This was 20 handles right here. That would have been 20 handles.
Order filled.
All right, I got in with 5 seconds left, assuming we're closing above this. I want to see it move quickly in my favor, or I'll be out.
Order submitted.
Stop loss move to break even. If it stops me out, I'm okay. It's a break even trade for me right now. I'm watching for these highs right here. So it's a break even free trade for me. I want it to run this high. If it breaks me, if it stops me at a break even, then it's a done trade. I want to see it pump. I want to see the pump. I'm going to take some off there. I'm just going to close it right there. So got another 5 handles there. And there's the push that I wanted to wait for, but I didn't. Surprise, surprise. Okay, so did you guys see the obvious? We are obviously making a run with almost zero retracements to the downside. So when we have an inversion, we're going to take it to the liquidity point and then move our stop to break even to protect our position. So that's what I did on here, and it's why I was willing to get into the trade, because I'm like, all right, if it gives me any type of move up, I'm going to move my stop to break even right away, and hopefully we get a little bit of a push higher. And that's what I did there. So I'm about back at break even from that first loss. So those were basically 2 trades to bring my balance a little bit lower without having and taking on much risk, because I was quick to move my stop to break even. That's the great thing about inversions. Inversions really will give you the opportunity to move your stop to break even fairly quickly. Now we're getting aggressive right here. That's irritating. You look at that and you're like, oh man, I should have held. Yeah, I know. There's your inversion. We have another close right there, which I did not take. We should hit this right here. Sorry, I'm still on that. We should hit the all-time highs right there. There it is. Bam. Smacked it. So this trade from the 3-minute worked, except we moved our stop to break even. So here's our 3-minute. We closed above it here, and our stop we moved our stop to break even once we grabbed some of this liquidity, and it stopped me out, so I wasn't able to hold through the trade. But as you can see, this one fair value gap, when it was broken, has now ran to the highs. Ah, look at that. This is what, I mean, I knew that we were probably going to go there, but because I only do one size, like I was telling you, Michael, I couldn't scale and then hold for this move. Now you're probably thinking, well, why don't you just do multiple contracts? Because the contract that I'm specifically trading on or executing on is my only account that was in major drawdown. So I have all my accounts are in green except for one that was almost at being blown, and I'm trying to build a skill set where I build that account back out of drawdown, because every trader needs to be able to get out of drawdown at some point. So I'm doing that very methodically on one of my performance accounts. And so because I'm only trading one micro contract because it was so close to being blown, I'm trading only one micro contract on it. So I'm almost to the point where I'll be moving to 2 micro contracts on that account. I just need probably another $150 on that account, and then I'll be fine. I'll be able to do multiple contracts. But until then, I've chosen to submit to the process of time that it takes time to do this. I'm not trying to rush it. I'm not trying to make money fast, because if you try to do that, you're going to end up making mistakes, because your primary goal is to make money when your primary goal should be education. So my primary goal has moved from education to now learning to follow rules, to do the hard things, to get out of drawdown in certain accounts, because I'm building those skill sets that are going to be the foundation for when I move to my primary goal of making money. Obviously, I want to make money. That's my ultimate goal. But I have stages that I'm progressing to, and as I continue to progress, those short-term goals are changing. So now that we're at all-time highs, we're technically out of the macro time. We're at 11, almost 11:30. Lunchtime, I don't know what's going to happen during lunch. So it would probably be, this is a decent time to probably call it a day, to be honest. But let's see what happens here. This is the 30-second. This is 50-50, guys. Yes, it's very bullish. You're thinking, well, if it inverses this, will it go to these highs? Well, it doesn't have to go to these highs. We're not redelivering off. We're redelivering off of nothing. We've never been this high before, so we don't know. It's just not. Now, one of ICT, it's on my Twitter page, or my X page, where ICT talks about where if you long fair value gaps until they stop working in all-time highs. So you would long this fair value gap. So you could long this fair value gap, go long here, and see if we're going to hit all-time highs again. The downside with this inversion and trading up here is from this high to this low, it's in premium. So the close above this inversion would be in premium. You want to buy in discount, which from this high to this low is technically discount. So if it finds support here, it could continue to see highs. This is me verbally processing, guys, by the way. This is me trying to put together what ICT's talked about. So you have this equilibrium, which if you're going to go long, you want to be in discount. So from this high to this low, it's technically discount. So when we inverse this, we're inversing it in the premium, so lower probability. So if you're down here and you take a long, there's less risk. You could sell it up here for some profit, right? If it doesn't want to go to these highs. This is aggressive though. I don't know if I want to take it. It's 9:30. It's 11:30. So we'll probably see another manipulation hit this, because at 10:30 we're gonna see a reaction. 16 seconds we'll probably see some momentum. A little pop right there, right in 7 seconds. Let's see what happens here. So 10:30. Typically 11:30 will give some type of animation. It's an animated candle. Yeah, it may go higher, Deborah. All right, so there's the all-time highs. Again, new all-time highs. Surprise, surprise. Yeah, I'll answer that here in a second, Michael. So that would have worked. Both of those ideas would have worked. It's just, I don't know if I want to take it. I mean, it's just a personal preference. So both of these ideas worked out. Why this fair value gap? Because it's right above an order block. Here's a 1 minute order block sitting right above, right below a fair value gap. So if prices are going to find support at a fair value gap, it's going to be the fair value gap right above an order block. So we found support in this fair value gap. It respected the consequent encroachment of this fair value gap, and we moved the other direction. We inversed this, and then we hit the highs. So both of those could have been a trade idea. You're just risking being at all-time highs and not knowing what price wants to do at all-time highs. It is difficult. Michael. Let's answer this here. Okay. So Michael's question here is, so ES didn't follow NQ on that run-up, like it seems to do a lot. Would you explain why ES seems to follow NQ sometimes, but not always? Hang on a second. Sorry, I was getting a phone call. And then they ended the phone call. Okay, so the reason why NQ and ES, they're different indices, but they tend to have similar assets in the indice. So they don't have to do the same thing, but they tend to follow the same patterns. So if they're uncorrelated, meaning they're not going up at the same time, it can be a sign of choppy price action, of unfavorable markets. When you see correlation, that's a great thing. Here's what you typically want to see with correlating markets. You want to see it correlate, and then you want to see the break in correlation at the swing highs and swing lows. So like for example, this high and this high. You want to see a break in correlation where one of them doesn't make the higher high and one makes a lower high. When you see correlating markets and then they break correlation for a moment and then they go in the same direction again, that is what's the word I'm looking for? A sign, overlapping PD arrays. It's a sign that you may see price change direction. So when price is not correlating at all, That's a sign to just stay out and not do anything. It could mean choppy markets. It could mean consolidation in the markets. And right now, that's kind of what we've been seeing, is just consolidating back and forth, moving up and down, grabbing liquidity. So hopefully that answers your question, Michael. It's not, you do not take trade ideas solely on correlating markets and a breaking correlation. If you guys want to practice, try single micro on the 15-second Nasdaq. Go long on pullbacks on the correct ratio. Stay out of wiggle. So I've tried that actually. The winner circle trader on the 15-second, where I would play the pullbacks, or what ICT calls the immediate rebalance. When you do it on every single one, it doesn't work. You really have to pick and choose which ones you do it, and it just became a game of, I felt like I was gambling, and I felt like I was trying to make something work. So I ended up stepping away from that. I'm liking the setup that we're seeing right now. So we have a high, low, higher, high. See how clear this is? See how clean it is? I like that. I'm not saying I'm taking a trade, but I like the way price looks. If you're asking me what am I doing still on, I'm seeing if there's going to be a setup that I can get out of. Basically, I can get back to break even. I'm a little below break even, but maybe get green for the day and call it a day. Here are those equal lows that we still had. That would be a potential draw on liquidity. If I'm going to target, if I'm looking to go short, this is what I would target. So you have a close on an inversion right here. We should run these lows right here. So there's a short entry that just happened from this inversion. All right, so there would have been your target on that inversion that just played out. So I'm looking for this. I'm back on the 30-second. I just want to see a little more structure to see what happens here. See if price wants to come and hang around here. If we get price to come up into this area, I look at going short. It could easily. This is not an A plus because we're not redelivering off of something. We have no upside target that we've hit. I'm not sure if we hit the upside target. Maybe we have, maybe we haven't. So
order filled.
Dang it.
Order filled. Direction. Order filled.
All right, so I'm looking at a short here. Let's see if it holds. If we inverse this, I'm going to close it because it's going against the order flow that I want to see happen. I don't like this. All right, I think I'm going to get out here. Okay, we didn't close. I'm liking this 30-second more than I am this short because of how aggressive it is to the upside here. Yeah, I'm going to
order
close this.
Filled.
Yeah, restart it if it's freaking out. Closed above it, I'm not taking it. I don't want to get too trigger happy here. All right, guys, I think I'm going to call it a day. We'll call it a day. Thanks for being here. I will actually try to stream tomorrow. Tomorrow is Tuesday, and then the rest of the week I will be out of town, so I will not be able to do any type of streaming. So if you enjoyed that, consider giving a like. I'd really appreciate it, guys. Thanks for being here, and I will see you guys